Hello everyone, welcome back to my channel. So this video marks the end of the week number 75 in this road to 100k realized return challenge, and on the contrary to what has been happening over the past few years when it comes to trading, in the last few days of the year and at the beginning of the new year. This time there was no such rally or no such thing as a markets trending up. This year the markets came exactly the opposite way. They trend down for basically the entire week. I believe this is some sort of reaction coming on the back of 3 years of successive and significant gains for the stock market. This is the third year in a row that, for example, the Nasdaq posted a 20+% increase in its valuation, and so yeah, because valuations are stretched to say the least. Markets at this point are, and markets and investors for the most part, are a bit more cautious, and you could tell that there was probably some sectoral rotation going on because for example, the Dow Jones did not perform as badly as the Nasdaq, so some rotation to more real economy, quote unquote, sectors must be going on. But let's just get into it. So as you can see here, the markets traded down for most of the week. This is the Nasdaq. This was the performance of the Nasdaq. The Qs, which basically track the Nasdaq, and this, as you can see, is basically a quite negative performance, especially from midweek onwards. This may have something to do with the data that was released, not so much on Monday, because on Monday, yeah, pending home sales increased somewhat, but this is not a market mover. This was a much more significant one, the minutes for the Fed December meeting, and this one was particularly important because um, as the minutes came out, you could tell, and I opened here this news piece. Never mind this breaking news here. I'm sure that there will probably be some ripple effects in the market next week, but we'll get to that if it actually has some effect on the market. But basically, what the minutes transpired was that there was a it was a highly divisive decision to lower interest rates last time around on December. And basically, what this means for the market, because as you can see, there was a 9-3 vote. So there was quite basically a quarter of the members decided or had the stance not to lower interest rates. And what this basically means is this introduces more uncertainty in the market expectations when it comes to future interest rates. Nonetheless, of course, most participants believe that further downward adjustments, so further interest rate cuts, must be made only if inflation continues its downward path towards the 2% target established by the Fed. And so most likely, and this emphasizes basically the expectations which are currently reflected here on the Fed funds futures, that for the next meeting at the end of this month, January, most likely the interest rates will remain stable between 3.5 and 3.75%. But basically, this is something that is important because basically it poured a bit of a cold water on the market when it comes to the expectations that the Fed would continue to lower interest rates. But I believe that a bit more of willingness to lower interest rates will come about when the current US administration nominates a replacement for the current Fed chairman, which of course will be the successor of Jerome Powell. And this person, in my view, may be a person which is more in tune with the expectations that the current US president has when it comes to interest rates. US president wants to have interest rates much, much lower than they are at the current level. And so chances are he will appoint a new Fed chairman, which is more in tune with this belief. And so I believe that over the long term, over the next year or two, we will see further interest rates cuts down later down the road. Nonetheless, yeah, this did not particularly made any did not created any big reactions in the market. This was about the time here at the minutes were released. The reaction came a little bit afterwards, and yeah, it came in a form of a downward trend that began late on Tuesday and continued on Wednesday onwards. Whether this was because directly because of the minutes, yeah, we can't tell exactly, but yeah, there may be some influence on it, but we can never tell. When it comes to the jobless claims, even though it does not say here, they actually fell, and they fell for the third straight week, and the number is 199,000. This is basically a decrease from basically the last week, about from around 16,000, and also because of this, and this may have reflected a bit more as a reaction to because this was at 8:30 a.m. So this was probably the cause of this continual downward trend, because basically what this means is that, all right, since less people are filing for claims right after being unemployed, that means that less people may be becoming unemployed. So there is less of an incentive for the Fed to continue to lower interest rates. And probably that is the reason why the market continued to come down here, especially in the beginning of the session on Wednesday. Even though, there was a large gap up here on Friday, but then the market quickly reversed. But nonetheless, this is where we stand at the moment. This U.S. manufacturing, and basically this was not a particularly relevant reading, the U.S. manufacturing. But then, we basically, in terms of the trades that we did, we, as I mentioned on Monday on the last video, we sold the puts on IWM and the calls on Qs, and we also sold the put on ARKK. Oddly enough, these puts on IWM were assigned immediately, although by a relatively lower margin, because the price, as you can see here, of this number, the 12 cents, that means that the market closed at 249 IWM closed at 249.88, and so we bought the shares. But and then we set about basically selling calls on IWM as well. Here we bought the shares, and so on Tuesday, actually, this is Tuesday, we actually tried to set ourselves up for a capital gain of $200. And why is that? Because the market opened slightly above 250.06, 250.10, And so we basically tried to see if this momentum would keep going, and that's the reason why we sold two calls with a strike of 251, which would set us up to sell our shares at 251, and that means a $200 capital gain. But this never came to fruition. The market immediately started to come down, and before we actually because this comes again into play, the knowledge that we have on the Greeks. As the stock continued to come down, these calls on the 251 would lose value, right? Because the stock is coming down, the calls are going further out of the money. But because this one was further out of the money than the 250 call, that means that the gamma is actually lower on the 250 call, on the 251 call, than on a 250 call. And what I say when I say that the gamma is lower, that means that the delta is losing, is dropping because the stock is coming down. So the delta on the calls has a positive relationship. All right, so the delta is being reduced as the stock comes down. Both the 251 call and the 250 call have their deltas coming down. Both of those deltas are coming down, but because the gamma, because this 250 stock is closer to the money, the gamma here is higher, and that means that this call is coming down. The premium is coming down faster than this one. So this call, the 250 call, is losing value faster than this one. So it makes no sense to wait until this call to drop further fall further in premium so that we can buy it back. Because if we wait longer for this call to become cheaper, that means that this call would lose its value even faster. And by the time we buy back this one to sell this one again, meaning rolling down, there's no point in doing so because we already bought this call almost without value. That means that this one has already lost most of its value as well. So because of that, we decided to buy back this one with still some value, because the value of this one was dropping much faster. And even so, I recall that when I bought this back at 8 cents, this call was selling at around 2022, and I tried to bet on a pullback and try to sell at 25, but it never came. And because the stock continued to drop in value, I had to continuously setting the premium I was willing to sell the put lower and lower and lower, try to grab a buyer, but only after a while I managed to sell at 15. You can see here I bought this back at 4:02 p.m. and only 18 minutes later I managed to sell back to sell these calls. It took me 18 minutes of waiting and nudging my price down and down and down from 20, 21 to 19, 18, 17, 16, and then 15 to actually be able to sell these calls. Again, but because the market continued to drop, after this, there was nothing else to do. These calls continued to drop in value. Eventually, they expired. We still managed to, we captured this gain, of course. We would have made more money if we sell this one directly, the 250 call. But of course, because the stock was trading a few cents above the 250, I was betting. I think it was worthwhile to put ourselves in a position to have a potential capital gain that would come about if the stock ended the day at above 251. But that was not the case. Of course, you have to make compromises in order to put yourself in a position to have a potential capital gain. You have to give up some premium. I'm very comfortable with that. That's not a problem. Now, but because the market continued to come down, and here on Wednesday, as you can see here, the market came down badly at the beginning on Wednesday. The 250 call expiring on the same day on Wednesday was no longer viable. There was no premium whatsoever in there. I think 2, 3, 4 cents. So yeah, not really significant. So there was no other option for me, no other way for me than to just extend our maturity and set a call and sell calls not expiring on the same day, Wednesday, but expiring on the next trading day, which would be Friday, given that Thursday was a holiday. And so that's what we did. We still managed to collect this premium. But then, as you can see, the stock finished the day below 250. There was actually a strong performance on Friday here with quite a lot of volatility, but it managed to come up, and I was hoping that perhaps it would reach a 250, but it never came. But yeah, we kept the premiums. The calls expired here worthless. Our put on ARKK also expired worthless from the beginning of the week, and the calls that we sold on Qs also expired worthless, especially being so far out of the money at 613. I thought about selling the calls already for this week, buy back these ones, because they basically the calls that we sold on the Qs basically spent the entire Friday on trading at 1 cent, so we could have bought those back and roll over the position for another week. But again, I'm hopeful that next week things will be different. Keep in mind that we will start very soon the earning season, and so I think there will be some earnings next week. I think there will be some earnings next week. Let me see. No reports on this date. Let's see. Reports. Yes, that's it. So earnings will start next week, and yeah, in earnest, let's just say. And even though I don't see any significant earnings in here when it comes to technological companies, but they will come. And I believe that because of the earnings season, there may be some push up the markets. Let's not look at NVIDIA, because NVIDIA is one of the latest ones, but let's see. There will be a dividend for this one. AVGO, which is Broadcom. Yeah, there's no yet any announcement, but let's see. Amazon. I believe that these may start to come soon, and because of that, we will be able to basically capitalize on a potential upswing of the Qs over the weekend, and sell calls at a bit of a bit of more premium than the current situation here. Even though, of course, probably the theta effect will be larger because of the passage of time over the weekend, then put up any potential change in the price, because these shares are pretty much the options on the 630 strike are very much out of the money. So probably the theta effect will be larger, but still, I decided not to do it, and let's just wait and see what happens. For next week, of course, we'll continue to sell the calls on IWM. if the price opens at this way at this point, 248.77 or anything around this, we will still sell calls at 250, try to break even and collect the maximum premium. And with the excess cash we have, we may sell another puts on ARKK or something like that, because given the tech sector is quite depressed at this point, probably ARKK is a logical choice to sell more puts on that, but we'll see. In terms of our results, let's just take this 12 cents out of here, because this is just a mark-to-market value, and we managed to collect a little bit over $478, so not ideal, but still, yeah, it was the best we could have hoped for. Our current cost basis, we managed, with the premiums we collected for the IWM shares, these 3 sessions with premiums, set of premiums that we collected, that means that our cost basis has come down to 249 and 1 cent. And in terms of our shares on the queues, with the premiums that we received this week, we are now with a cost basis of a little bit over 620, but nonetheless, it's our objective to get back our 630 and continue to at least break even and keep the premiums as a profit. Because the price is already $10 almost in terms of difference, and we are talking about 500 shares. That means that we already received close to $5,000 in premiums just from these shares, which is not a lot. We are with this position already for over 2 months, and there is no and we are not going to relinquish it at this point anytime soon, because the price is still quite a long way from the 630. But yeah, let's hope that this year things continue to go in a positive way as they have been, and this was just a bump in the road. Yeah, for the time being, this is all. Next week will be another full week, 5 days of trading finally, and hopefully premiums will come back to the normal level. So yeah, feel free to leave your comments in the comment section down below. I'm also available on LinkedIn in case you need to ask me any questions, and as always, feel free to like the video and subscribe to the channel, and we'll reconvene either on Monday evening or on Tuesday morning to start the week number 76 in this challenge, and I'll see you there.